Hello folks, welcome back. Hopefully each and every one of you is doing well. Today I want us to do something or walk through the market maker cell model and how I view the model, what are the insights, and hopefully you found this the simplest way to handle the market maker cell model. So what you're looking at your screen right now is just a sketch, so that before we go to the charts, I wanted to highlight a few things here. So you look at this chart, we have the left side, the rising side, you also have this other side here. So this rising side, this is the buy side, the buy program, while this other side is the sell program. So before we talk about this sell program, we know that price was buying. Now what is happening here? Price is buying higher to a higher time frame key level. This higher time frame key level, I have highlighted a few the PDRAs here. It can be an order block, or it can be a breaker block, a rejection block, fair value gap, liquidity pool, buy side or sell side liquidity. It can be a volume imbalance, it can be a mitigation block. So when price has reached a key level, that is when the way price rejects that key level, causing market structure shift, then we can now have a higher probability of having a reversal from that key level. Now once we have a reversal, then what do? That's where now we start to look for sells. Now we have changed from buying, now we are selling. When price tags our key level and rejects quickly below a short-term low, closes below the last up close candle that caused that took liquidity, that is an order block. When we see such one, when it closes below a mitigation block, when we have an SMT, we have a change in state of delivery there. So once we have a market structure shift, we are shifting from the buying aspect now to the selling aspect. So what we do, then now our work is to go to our PDRAs and see what happens. So reversal from a key level, speed away, price comes back. What is in this region here, now we have a breaker. Either we have let me have this, yes, so we have a breaker, or we have a fair value gap, or we have an IFG, just generally a unicorn. This is what I'm calling a low risk bar, a sell. This one, LRS, low risk sell. So from here, all the time, of course, you've been doing this. Now this can be your first entry after you've taken liquidity. We have confirmed market structure shift. Now entry can be from the breaker, it can be from the FVG, IFVG, or that in general we can have a unicorn in our first case scenario here. When we drop lower, taking another short-term low, price coming back, all these up close candles here will be an order block, and then we can have a fair value gap also. Or if we have a short-term high here that has been taken, that can be a turtle soup, right? Then next again, price dumps lower, then returns back, and then to what all the time, most of the time, are an order block, an FVG, or we can turtle soup also if we had a short-term high there that has been run through. Now objective is going lower to any region that is consolidating the first when we were buying. So that region down here that was consolidating, and most of the time this is not things that you've not seen. You've seen this. If you are targeting this region here, can be a liquidity sweep, sell side, or it can be a previous day low, it can be a previous session low. You've seen those things, right? Yeah, so majorly that is what we are targeting up. So before we began to sell, we were buying. The moment we change state of delivery, we have a market structure shift. Now we are no longer interested with higher prices but lower prices. So we have the first entry, low risk sell. The second entry is in the distribution stage, first stage. Then the second stage is redistribution stage. That is the second stage. And I've given you what are the PDRAs that you can check through so that you can ride the wave lower. Hopefully this you've screenshot this one. So we can go to our chart here, and then I can show you now in real chart what actually happens. So when this chart is like this, if I can take out this, once it's like this, it might not look, you know, useful at the moment, right? Yeah, when it is like this, honestly, you can be like, now what is, doesn't make really sense. But look at this one closer. We had a buy side sweep there, price came down, took out this short-term low. That is a market structure shift. When it took that and then came back up, you can see here, this is what, an inversion there, right? Price tags there, and also we have the last up close candle, or the series of up close candle, end of this one, that is an order block. Again, we have a low, a high, a low, a high, a high, the last down close here, that is also a breaker. You see a confluence of PDRAs there, which can help you make wise decisions before you start to execute your trade, right? Then price runs lower, comes back, runs lower, comes back again, and then it dumps lower, taking out all this consolidation here, then to our sell side liquidity. But watch this. Did you see that? So from the first chart, that the sketch, now we have, after price takes out that high and runs lower below this one, that is, we have a market structure shift. Price goes lower, comes back, breaker, inversion, order block, sells once more, comes back. Remember, these retracements, we said they are going to a key level. You see that? So we have another, what is this? Order block. You see that? Another. So we have low risk sell, redistribution here. First stage, if you missed this one, you can sell from here. Price dumps lower once more, comes back up again. What is this? Immediate rebalance there. What do we have here? A PDRA, FVG, right? Are you following through? You can rewind this again 100 times so that you get. So price, anytime you are seeing retracement after price has taken some short-term lows, those retracements, if you are in a sell program, those retracements are headed to a key PDRA. You feel me? So if you miss the first entry from breaker, FVG, order block, IFVG, check the second re-entry from the order block, FVG again, the third re-entry, and this is the last. The second stage is the sweetest one because it is near to your target and price gravitates very fast away. Sometimes it can tap then go without even giving you an entry. Did you get that, guys? So when we are dealing with when you're dealing with this aspect of market maker sell model, number one, we want to see price reacting off a higher time frame key level. Number two, we want to see now our PDRA is being respected once we have started to sell. So first stage, you can use the unicorn. Then that is the low risk sell. On the first stage, let's look at the fair value gap and the order block. The second stage, now also the fair value gap and an order block, or you can turtle soup depending on the price that is at that given point in time, right? Now before maybe you start to sell, then the most important thing, you have to turn this on. So you see London, New York dumped, London high of the day, New York continuation, London high of the day, New York continuation. So most of the time London is forming the high of the day, New York continuation lower, London high of the day, New York continuation lower, and London high of the day, New York continuation lower. So all the time then price in everything that you do. This is one of the simplest way to do the market maker sell model. Guys, hopefully you found this insightful. Continue grinding. It shall be well. Until next time, be safe.